and welcome to the second video for the cash flow statement, international contact number 7. So what we're going to do in this video, we will try to solve 3 questions, which is pertaining to the inventory adjustment, receivable adjustment, payable adjustments for the cash flow. So we already in the last video discussed and tried to adjust what is the different format of the cash flow. Now the next step is to do different adjustment within the cash flow statement. So if you can see question number 19.11, 19.11 means it's from the netting chapter, question number 11. They have provided you some sales, some discount, some doubtful debt. So opening and closing receivable, opening and closing for the doubtful debt. So what we do here is we create a few accounts. Number one account we create is for the account receivable. But actually, this is what we are trying to do. The requirement of the question is to find out the cash that has been received from the customer. So in the above information, they have provided you almost opening closing balance and few more adjustment, but they haven't provided us the value for the cash. So therefore, what we do, we created 2 accounts. You don't need to make a third account. Like one is for the sales. Sale has only 1 entry, so you don't need to prepare this T account only for this one. Second is the receivable. So this is the one which will answer the requirement of the question. The third account is our account for allowance for doubtful debt. Allowance for the doubtful debt has another name, provision for doubtful debt. Allowance for the doubtful debt show you the provision or the percentage which we think are considered that our debtor is going to default this year. So it's a perception-based percentage that I believe that 1% of my receivable every year become a bad debt. So what accounting standard says that you have to create a provision on that, which is called allowance for the doubtful debt. And you have to record this possibility that this debtor is going to default. Anyways, I think you have already covered in last FA1, financial accounting 1 or 2. So let's get back to it. So my way of solving a question is that I read the value and I put it into the T account. Number 1 is a sale. Sale is 400,000. So 400,000, instead of writing 100,000, all the values in this T accounts are in 1,000. So our receivable is 400,000. On first end, we have the receivable account where we put this value of 400. And it will be debiting the account receivable and credit the sales, simple sales entry. Then you provide a discount in there for 10,000. So discount is mentioned here. Second is a doubtful debt expense for the year. So this is the entry normally which the students only one entry which can solve the whole question while writing the doubtful debt for 5,000 as an expense on this side of the book. So the third one is opening closing balance for receivable and opening closing balance for the doubtful debt. So on the right hand side, we write the opening balance, which was 90,000 here. So 90,000 here, 80,000 closing, 18,000 closing, opening balance 9,000, 9,000, closing balance 8,000, 8,000. So after putting all the figures into the picture, you can see what we have a balancing figure come out from the account or allows for the doubtful debt, that is 6,000. So 6,000 is debiting here with the name of account receivable. And this amount will go to account receivable this side with the 6,000. So we already have 90,000, 400,000, 6,000, 10,000, 8,000. And the difference which is coming is the answer of the question, that how much cash we are getting from the debtor. So the entry for the cash is from a debtor or anywhere. So cash account will be debited and debtors or receivable account will be credited. So in this situation, the balancing figure on the right-hand side, which come up is 394. Right-hand side is the credit side. So we write 394, 394. So automatically, this is the answer for the question. Now, why we do all this practice? In order to find how much cash we get from the receivables. So in this question, the answer is 394. So once we are preparing the cash flow statement, just remember any cash from the debtor is operating activities. So this final amount will go to the operating activity under the cash received from the debtors. So remember this, all the activities we are doing for the current asset and current liability is a part of our operating activity. Now let's move, yeah, then there is another alternative way of show. You don't need to make a T account, you can write into a statement form. I like the way of T account since maybe I'm old school, but you can go ahead and you can make a statement form, still save. If the answer is right, I have no problem with the midterm marking. And it's okay for me to accept this alternative statement way. Okay, now we are working something on the supplier. You need to determine how much cash you receive from the supplier. Means you make some purchases and there is a payables, your liabilities. Liabilities, of course, will become a part of, not liabilities, the creditors or the suppliers or the payables. They, an increase or decrease in their account is a part of, again, operating activities. So in this question, they merge two concepts, one from the inventory, another one is from the payables, which is a supplier in this case of this question. The question number is from the book is 19.12. So first of all, again, the first thing you need to do is to start preparing the account. So first account they prepare is account payable, another is inventory. There is only one entry for the inventory and the remaining person is the same. So let's read the question. So they give us cost of goods sold, which is 60,000, 60. We put this 60,000 on the cost of goods sold. The inventory account will be credit and cost of goods sold will be debit with the 60,000. So we write on this side. Then for 80, and then we do our purchases on credit for 80,000. So any purchases on credit on 80,000 will go to the account payable by 80, and inventory will be debited because we are buying inventory. So inventory will be cash in. The entry will be inventory to account payable. So inventory debt, account payable credit by 80,000. Excellent so far. Second is after the purchase, they do something for 2,000. That is a discount received from the earlier payment to the supplier is 2,000. So we receive a discount on the debit side. The nature of the account payable is a credit. So if you want to reduce any money from it, it will be right on the debit side. So we receive a cash as a discount. Also, we write down on debit side 2,000 ringgit. And during the stock wave of owing to the water damage caused by melting ice in Atlantic. So there is a reduction in the stock by 5,000. We have to write it off because it got spoiled or damaged. So nature of the inventory, because this asset is debit. So if we want to write off anything or reduce any balance, we will write on the credit side, which is the case over here, and we write credit side 5,000. Then we have opening and closing balance for the payable, opening and closing balance for the inventory. Opening balance is given, closing balance is given, opening balance is given, closing balance is given. So inventory count will be more or less same. All the information is provided already given here. What is the requirement? So we need to prepare an inventory account, which we already did while putting all the information. So as you can see, more or less, it is just taking the information and putting it to the T accounts. Now, if we talk about the account payable, everything in account payable is given else than one figure, which is a cash figure. So in this case, the cash figure is 83,000, which is a balancing figure on the debit side of the account payable. It means we have received this amount of cash. Sorry, we have paid this amount of the cash to the account payable. So the entry will be account payable to cash. Now, again, this is a cash item. After doing all this adjustment, if we go to the operating activities, since we pay the cash to account payable, so it will be our cash outflow. And as I tell you in the last video, any cash outflow will be shown as a parenthesis on the sides. Okay, so far we have done the inventory, account payable, account receivable. These current assets or current liability, which are relating to the operating activities, we have already sorted out. If in the examination some adjustment come up, now you are able to solve it. So we are just trying to build up the cash flow statement step by step. So some of the small adjustment, then we'll move to the bigger one. Next question is question number 9.13. 9.13 is a trickier question. First of all, it is about the property, plant, and equipment. It is from, so PPE, we have a property, plant, and equipment. Property, plant, and equipment is a part of our investing activity. So anything we sell off, we buy new assets like machinery, plant, building, anything, that will be a part of an investing activity. So the scenario is given, which is very nice scenario. And in future, what's the question for the cash flow will come up. So this scenario will be the part. Okay, question number 9.13 is about adjustment to the property, plant, and equipment. Property, plant, and equipment is a part of an investing activities. So in this question, we will see if an asset has been sold and every information is given about that asset, which is fixed assets or what you call it a long-term assets or non-current assets. How are we going to determine how much cash we get while we make that sales? It's a very interesting question. I have done some adjustment in the solution. I hope you will like it. So I will create three accounts over here. Before that, there was no disposal account, but I created last night, and I do all the adjustment in this account. So what they have given us. So let's see the information and see what accounts we needed. They say you need to determine how much cash you have received on the disposal of an asset and how much cash that has been used to acquire throughout the year. So there are two requirements. One, during the year we buy an asset, so we don't know, the money is not given. Another thing is during the year we sell an asset and how much cash we get from selling is not given. So there are two problems in this particular question. So there are three accounts I have created. One is our property, plant, and equipment, then accumulated depreciation and disposal account. So property, plant, and equipment, opening balance, closing balance given 500,000 and 650,000. So we just write in the asset side, this is just an asset. So we write the opening balance, we write the closing balance. Next is 50,000 for the depreciation for the year. The entry is very simple, depreciation to accumulated depreciation. We write this 50 for accumulated depreciation, and we don't have a depreciation account over here, otherwise it will go to the depreciation account. Actually, we don't need to make an account for depreciation. It's like every year dispose of in profit loss. Okay, then we have accumulated depreciation, opening and closing balance, which is 200,000 and 210. So 200,000 is given, 210 is given. We just copy and paste the value in the T account for the accumulated depreciation. Again, the nature of the accumulated depreciation is credit. So its opening account will be written on the credit side, closing account will be written on the debit side. Then they tell us what is the gain on sale of assets. So once you are doing the final accounts, especially when you are preparing the statement of comprehensive income, or when you are preparing the profit loss account statement, you need to calculate this thing. What is the gain on the sale of an asset? But this time, the gain is already given. Their question or their concern is not about the gain. Their question is about in the cash flow, you need to find the cash flow itself, like how much cash you will generate or you have generated on the sale of this asset. So that's our 20,000. So I have created an account for disposal. So if you have any gain, it will be written on the debit side. If you have any loss, it will be written on the credit side. So let's see. Last value is the carrying value of the property, plant, and equipment that has been disposed of. So 90,000 is the amount which has been disposed of, means which has means okay. So first of all, what is the carrying value? Carrying value is your cost less accumulated depreciation. So this is the carrying value itself is 90,000, which has been disposed of. We have got 20,000 gain on that. So you need to find out how much cash we receive while we dispose of that asset. So in this question, what we try to do, we will find out the balancing figures and see how far we can go in that. So first of all, accumulated depreciation gives us a value of 40, which is an excess amount. So this is an amount which was reduced this year, the balance of the accumulated depreciation while debiting it. So it means this is the value which is accumulated depreciation for the disposal of the asset. So when we dispose any asset, we also take out its accumulated depreciation from the balance, because accumulated depreciation is a sum of all the depreciation of all the assets carrying out from one year to another year. So this 40,000 will come on this side, which is a credit side. Gain already we copy and paste from the question. Now we discuss about the property, plant, and equipment account. This is very interesting because in this question, only the opening balance and the closing balance in the question has been given. Nothing else has been provided to us. But the amount of disposal is given, which is one of the figure which we try to find out is 130. Cash is the balancing figure. How this 130 come up? That's a question. So I give you 1 second or a couple of seconds to think about and pause this video and see how this 130 come up. Okay, your time is up. So 130 is come up based on two values. Number one is the disposal value. So from the accumulated depreciation account, we already see that the asset which has been sold is depreciation throughout the life is 40. Okay, fine. Then from the question on the top, if I go above, they also tell that the carrying value is 90. So which is carrying value is basically the cost less accumulated depreciation. So we already know the accumulated depreciation. So carrying value is equal to cost less accumulated depreciation. Carrying value already given, which is 90. Cost we need to determine. Accumulated depreciation we know is 30 or 40. 40. So that 40 will go on the right-hand side of the equation. So cost will become 130. This is how we determine the cost of the disposal of an asset. So you can see we have to do some of the math if we are solving some of adjustment in the cash flow statement. So this 130 will be the disposed during the year. So in the property, plant, and equipment, we always write down the value in the cost form rather than the carrying value or the depreciation. So we calculate the disposal value. We already know the closing value. We already know the opening value. So remaining balance is the cash, which we have spent in buying a new asset. So property, plant, equipment is being debited and cash has been credited by 280,000. So this is a figure which is a balancing in the property, plant, equipment. Accumulated depreciation we already done. Now I like to take your attention towards the disposal account. So once the property, plant, and equipment has been credited, the disposal account will be debited by 130. So we know the cost of the asset is 130. The depreciation is 40. The gain already given is 20. So remaining figure is the cash we receive on disposal of that asset, that is 110. So this will be the balancing figure, and that what we write as a solution. So far in this small video, we discuss about the different adjustments on current assets, current liability, inventory, and property, plant, and equipment, which we're going to do in the cash flow statement. So that's pretty much it from the lecture point of view. Remaining questions along a full-fledged question, I will definitely attempt during the time of a tutorial. Until then, I will see you in the class. Take care. Bye-bye.